Hello, everybody. This is Keith Caldwell with Our Special Voice and Our Special Needs Children. I'm here with my friend Ryan Platt, who's going to talk to us today about the ABLE Act and the changes that have happened recently. So, Ryan, why don't you introduce yourself and tell us a little bit about you and your company?
Sure, Keith. Ryan Platt with a company called A Special Needs Plan, started approximately 10 years ago. And so we serve families that have a loved one with special needs to ensure that everything's put together properly so the future is handled the way that the families would like it to be.
Excellent, excellent. Hey, I just want to tell everybody the chat is available. You can chat. If you have any specific questions, you can add it as a question, and it'll come to us that way, and we'll try to get to them as best we can. So, Ryan, why don't you go ahead and take it from here?
Okay. Well, everybody, I know we wanted to talk about the ABLE Act. We did an ABLE Act informational session right when it was passed, when it first came out, when it was passed back in December by Congress and then signed by the president before the end of 2014, and then had some details at that point. And after that point, it goes to the Treasury Department to put together the regulations of how it's actually going to function. And so what happened on June 19th is the Treasury Department published their proposed regulations. So what we're going to talk about today is a little bit of a repeat of the first one for some of you maybe that didn't see it or haven't heard too much about the ABLE Act, to give you a little bit of details on it, but then also provide you some additional details of the proposed regulations. And the reason that we wanted to do this today is because at this point, those proposed regulations are in the public comment period. And they'll be in the public comment period until September 21st. And please, I apologize ahead of time, guys, if you see me looking down, but there's a lot of pieces of this, and I want to make sure if you ask a question that I provide the correct information to you. So the public comment period continues until September 21st. So if you hear something today that you're not happy with, that is one of these proposed regulations, you need to get online, contact the Treasury Department and the IRS to voice your opinion, because public comments are due, like I said, by September 21st, and then they have a public hearing in Washington, D.C. on October 14th. And then after that point, they will finalize these regulations, and that's what we will have that will run the ABLE Act and determine exactly how it's going to be used. And so you'll see Keith and I again, if you like us, because we'll do another one of these when it's actually all finalized. So I just wanted everybody to know that today these are not the finalized ones, but we're getting a lot closer. So, but we wanted people to know. So like we said, if you don't like something, take action. Call them up. Tell them you don't like it. They're waiting for your comments.
Okay, go ahead, Ryan.
Yep. So one of the things that we want to talk through is, again, just chatting a little bit about how you open an account. One of the things that we weren't sure about in the initial in January, when we initially did one of these, when we got the kind of top line or global view of the ABLE Act was, well, who's going to be able to open it, right? Whose name is it going to be in? Well, these proposed regulations give us a little more insight into that. The individual with a disability can open it themselves if they have the ability to do that. If they don't, a parent can open it for them. A legal guardian can open it for them. Or like I said, or the individual themselves can open it as well. And so those are kind of the people right now that are in these regulations that can open these accounts and help run them, so to speak. Again, when we're looking at these accounts, please do remember that the maximum we can contribute in 1 year is, at this time, $14,000. And that moves with what's called the gift tax exclusion number. So that number will move every year. So you want to just be cognizant of that when you're deciding if you're going to use one and how much money you're going to put in. Again, One of the things that we talked about in our initial webinar on the ABLE Act was many families felt this was going to replace the need for a special needs trust. And again, one of the reasons why it doesn't is because you can only put $14,000 a year in it. And although that can sound like a lot of money, if you as the parent pass away and you want to leave money to your child and you're thinking you're going to leave it to the ABLE Act, and you have dollars that are worth more than 14,000 in a cumulative number, and that would include life insurance or retirement money that you want to leave them, you can't really use it for that. And so you need to understand that piece as well as you're putting the ABLE Act into your overall plan to ensure that it fits exactly where you need it to be. And so, so those contributions are, again, like we said, $14,000. An individual still in these regulations can only have one account. So different from many people may be familiar with the 529 college plan, because that's where the ABLE Act sits. Some people are calling it a 529 ABLE. It sits in that same area of the tax code. And in that type of college fund, a grandparent can open one, a parent can open one, a child can have multiple 529 college accounts. Well, that's not the case with an ABLE account. They can only have one. So one 529 ABLE account for each individual person. The other piece of how do you open it, which we weren't exactly sure, was, well, how does the government know that a person has a disability that wants to open up an ABLE account? Mm-hmm. What kind of paperwork do they need to bring with them? What do they have to show that says, I qualify for this account, I have a qualifying disability, I was disabled, before the age of 26, so I'm eligible to open this. Interestingly enough, these regulations kind of leave it open to each state to determine what that paperwork would be. So, for example, the quote in the regulations is, each ABLE program may determine the evidence required to show if an individual is eligible for an ABLE account. But then it goes in to give examples of what that might be. So one thing on the least restrictive side is that your child or you as the parent or you as the guardian basically just has to make a disability certification that you have to sign and be witnessed and notarized, saying that I am or my child is disabled, and then provide a diagnosis and provide a backup paperwork from either a physician or a psychologist that can go in the file that says, yes, this individual has a disability, this is the diagnosis, and this is when they were disabled. So you need a little bit of paperwork anyway, even if it's the least restrictive decision by the state that you are in, or by the state plan that you decide to use. Because again, not every state has passed the authorization to have an ABLE Act in their state, but that doesn't mean you might not have access to it, because again, in these regulations, it's stating now that a state, if a state doesn't offer it, they could contract with another state. So for example, let's say the state of Georgia says, you know what, we don't want to administer an ABLE Act, but we'll get a contract with the state of South Carolina and North Carolina and Tennessee, where our residents could use any one of those. And so that's part of this regulation as well. So in the event your state doesn't authorize it, you may still have access to it through a contract that they would have with other states.
Hey, Ryan, can I ask you a question?
Yep.
So are you saying then that if California, which I'm in, obviously they're going to do it, but if I was in a state that did not do it and they didn't have a memorandum of understanding with another state, then I couldn't open one?
Yes, apparently right now, that's how it reads.
So that's one of those things that we might want to send public comments to the IRS saying, hey, this is one of those little nuances that if a state decides that they don't want to do it, and they don't have a memorandum understanding, we're sort of left in the lurch. So that's the reason we wanted to talk to you guys now, so you have an opportunity to comment to the IRS, and they would actually maybe listen to you. Isn't that sort of like an interesting concept?
Yes, hey, maybe.
Maybe. And go ahead.
And one of the other pieces of making one of the definitions that the regulations use in reference to the definition of disability to qualify to open up an ABLE account is that, you know, the individual has a marked and severe functional limitations that basically results in being disabled for at least 12 months or for the rest of their life. And so those are some of the definitions that are part of being able to open the account and what we have to show, or we have to, you know, sign a piece of paper that certifies that, yes, I would qualify for this account. And here's paperwork from a physician or a psychologist that states that I am disabled. So again, that's gonna, right now in the regulations, we're gonna have to find out in whatever state you're in, you know, at that time, if the regulations stay the way they are at the federal level, then we're going to just have to find out from each state, the state that you're in, what paperwork they're going to need, because they're going to determine that themselves, according to the regulations now.
We have a question that I think some other people were nice enough to answer, but I just want to put it out there just in case. Someone named Drew was asking whether or not it was $14,000 per donor or $14,000 annually to the account. And I think I know the answer to that. But I thought I would point it to you.
It's, in this case, for the ABLE account, it's $14,000 per account.
Per account.
So if you had 3 people that wanted to give $14,000, they can't. Just one can.
So okay.
So it's $14,000 a year in terms of the maximum contribution.
Okay.
Per year.
All
and
right.
then the other number that's going to be important is $100,000. And that is once the account gets to $100,000 of an account value, not contributions, but contribution plus growth or interest, then all of a sudden your child will lose access to SSI, which is supplemental security income, which usually happens at around age 18 for most individuals if you go to Social Security and apply for that benefit. And so that'll be gone at $100,000 of account value inside the ABLE account. Now you wouldn't lose Medicaid, but you lose the SSI. And then in this regulation that just came out, there's a cumulative, sorry, I tell you, I'm a little punchy today. I can't quite get the words out, everybody. Just bear with me a little bit.
He's usually very articulate.
Yeah, I have to get my tongue out of the way so that I can speak.
Right.
The cumulative contribution that can go into an account is going to be the same as the 529 college plan, which again is determined by each state. So on average, it's about $350,000, right? But it can range, depending on what state you're in, from about $235,000 to about $452,000, and that's cumulative contribution, not growth, but cumulative contribution in the account. So there are going to be different caps. Again, please also remember, still in these regulations is the Medicaid payback rule, right? So if you do have a lot of money in this ABLE account and you put it in there and your child passes away with $150,000 in the ABLE account and they've been on Medicaid and have been provided services, well, Medicaid has the right to go back and get paid back for the cost of the services they provided your child since that account was opened. So if you had $150,000 in there and Medicaid says, hey, the services we provided your child over these years since you've had this account was worth $140,000, they're going to take $140,000 of the $150,000 at your child's passing.
Wow.
So you want to make sure we understand how all these pieces work. That's still part of this regulation. I don't think that's going to change because, again, you know, to get it passed, they had to make sure it was revenue neutral in the kind of budget process. That was one of the reasons it took 9 years to get it passed. And so that was one thing that's in there for, I'm sure, so it's not as costly over a 10-year period to the budget at a federal level. So we want to make sure we understand that piece as well.
Hey, Andrew, or not Andrew, Brian, let me ask you a question too that just came in from, let me see, from Lucy. I'm not going to mention your last name, Lucy. She does, how does the ABLE Act intermix with a special needs trust? And before you answer that, Ryan, I want to say to everyone who's listening to this, I'm seeing a lot of questions that are coming in on the chat side. There should be a way that you create it as a question. It looks different to us and it shows up different. So if there's a way that you can see that, that would be great. And I will still try to get to your questions, even if they're in the chat feature. But if you can find a way to get it over to the question side, that's ideal. Thank you. And go ahead, Ryan. So answer Lucy's question.
No. Yeah, the ABLE Act and the Special Needs Trust, they can work together. Again, when you're thinking about using these accounts, what I always think about with the ABLE account is it's really best used for in most circumstances. Please take this as very generalized information. Don't go out and start making decisions because you heard Keith and Ryan on the webinar. Yeah, we're on YouTube. Please don't do that. But in general way, the ABLE account is going to be a great account for the individual with the disability's money. And so many of you are looking like, well, they don't have any money. Well, let's say they do have a part-time job, or let's say you are receiving some SSI money early on in their life and they're still living with you and you're already paying all the bills and you don't need that extra money. It's just accruing in their checking account. Well, before the ABLE Act, families had to basically say, okay, the checking account's up to $1,800. It's time to go buy another iPad or another laptop, even though we bought one last year and we don't need one. But we have to buy stuff to keep it under this $2,000 number so we can keep receiving the benefits and the services that are so necessary. With the ABLE account, you can take that money and instead of having to spend it, you can open up an ABLE account and you can put your child's money in there and let it grow. And again, the ABLE account, think of it this way, as just another exempt account from qualification for government benefits like SSI and Medicaid, right? So it's a great account for your child's money as they grow. If they have a part-time job, it's a place where they can save money. Those places are the best. That's what I'm seeing right now in terms of all the ramifications and the qualifications for and the regulations on the ABLE account is really the best place to use it. The Special Needs Trust still has the role of parents' assets that you want to leave your child when you're not here anymore, or grandparents who want to leave money for your child when they're no longer here. Or like that question was before, can multiple people gift this $14,000? Not into the ABLE account. The place to do that would be inside the Special Needs Trust. If people wanted to gift money to your child for their future needs, it's really designed for the Special Needs Trust because the Special Needs Trust does not have a limitation on the amount of money that can go into it each year. So it's a great place for parents when they pass away to leave all their assets, because it can be whatever number that you have. But also, if the trust is set up correctly, there's also no payback provision to Medicaid at the end of your child's life. So if there's $400,000 left in this Special Needs Trust at the end of your child's life, well, then it goes to whoever you want it to go to. You know, other children that you have, future grandchildren, a charity, whatever that looks like, you determine where it goes. Whereas with the ABLE account, if you have a lot of money in there, it may just go back to the government at the end of your child's life because you have that Medicaid payback. So again, there's a place for both accounts. You just have to make sure you're using them in the right way to end up with the result that you're looking for.
Hey, Ron, I want to ask you a question that I know others might have too. So it sounds like you would have an ABLE account and you would use that as the first responder. You would use that to pay bills, to pay that down, to keep that down. But you should also have a Special Needs Trust to handle longer term needs. Because first of all, you get $100,000, you are no longer qualified for some services that you might need in the ABLE account. And then you have the Medicaid or Medicaid payback provision. So if you're using that account to pay expenses, to pay bills, qualified expenses, and you're paying that down, you're always paying that down, And then at the end of your child's, and then if you need to augment it with the special needs trust funds, you can. But they're really two different tools, not one or the other. It seems like they're two different things. Is that what you're saying? And I see all those questions coming in. I'm going to get to you guys in just a minute.
All right, questions. We like that, everybody. It's good. And so Keith, you're right. So right now, and we're going to wait for the proposed regulations, but I'm looking at right now in reference to the qualifying expenses that would qualify from an ABLE account. They're a little bit more expansive, I guess I would say. They're similar to what you can use out of a special needs trust, but they're also a little bit more expansive as well. So the thing about that is, you could definitely use both of them to the advantage of your child, but you probably don't want a large amount in the ABLE account. You'd rather have the larger amount in the special needs trust, because there's less restrictions in reference to amounts that can go up to. It doesn't matter how much is in there. There's going to be no reduction of SSI. There's no cap on how much can be in there, and there's no Medicaid payback provision. There's also, again, not quite as much reporting requirements. That's one of the things that really has gotten the people or people who have read this a little bit up in arms in terms of the reporting requirements of the distributions, in terms of how you're going to use the money in the ABLE account. Because again, the government, if there are qualifying expenses that you're allowed to use this money for, the question is, well, how is that going to be tracked at the governmental level to ensure people are using these accounts in the appropriate fashion? So they had to put in reporting requirements for each ABLE account. And what the federal government does is they gave a state requirement, and they said that each state has to submit to the Commissioner of Social Security on a monthly basis.
Good gracious. Statements
of relevant distributions and account balances from all ABLE accounts.
Wow.
Now, I'll repeat that.
No, please don't.
Yeah. On a monthly basis. Statements of relevant distributions and account balances from all ABLE accounts. Now, that's one that I would call and write about, because think about that issue of reporting requirements. If the state has to do it monthly, what is that going to mean for the individual account? It's either going to have to be monthly, and I don't know yet, right? I don't know yet if that means they're going to have to, if everybody that has an ABLE account that's using the money, if we use it, every month that we use the money, are we going to have to submit a report to Social Security on what we use the money for? Because they have to submit a report to the Commissioner of Social Security. So how are they going to know what you used it for unless you tell them? And so right now, and that's not a surprise, and at least not for me, because again, if there's any change in income or assets that you have on a monthly basis, you're supposed to report that to Social Security so they would adjust, if they need to, your SSI payment for the next month based upon any additional income or additional assets that you had the month before. So I'm not surprised that that's in there. It just makes it a little bit more cumbersome to manage that account. Like I said, still a good account, but that's one of those things that we didn't know yet, how they were going to want that reported. Apparently at this point in the regulations, it looks like it's going to be on a monthly basis. We're just going to have to make sure that that we, whoever's managing that account provides that report to Social Security in reference to if there were any distributions that month, what were they used for, so that they can make sure that it's a qualified disability expense. And the reason for that is this: if it's not a qualifying disability expense, it will be considered income to the beneficiary. and therefore that income will count against them, one, for benefit purposes. It will be taxed, and they'll get a 10% extra tax penalty on the distribution that wasn't properly qualified.
Mm-hmm.
So there's going to be penalties for not using the account correctly, which, again, not surprising, right? I mean, if they put an account out there for a specific purpose and people don't use it for that specific purpose, they should be penalized for it. I mean, that's reasonable, right? And the same thing happens with a special needs trust, right? You don't use that correctly, they slap your hand there too. In a little bit different way, but they do that as well. So again, the whole thing comes back to, for me anyway, and Keith can weigh in on this, as a dad and somebody who would probably be managing one of these accounts for his son, is don't do it by yourself.
Right.
Make sure you know that you have a resource that can help you make sure that you're doing it right. Because there's no sense in losing money because you didn't know how to use the account. Right? All it is having the knowledge necessary so you don't do the wrong thing.
Right.
And that you have the right thing set up. Right? So the account can be used appropriately, managed fine, as long as you know all the rules and you follow them.
Okay. Hey, Ryan, I want to address a couple of these questions if you don't mind, and we'll get back to your agenda, but I don't want to leave people hanging.
Hey.
And there's a lot of them now. Let's see.
I'm on everybody else's agenda.
That's right. And everybody, let's see. Monica asked, money left in a special needs trust when a child passes, would that money go to the government like an ABLE account money? And I think the answer to that is,
well,
in a properly created special needs trust.
There you go, man. Keith knows the words, everybody. I'm telling you what, he's good.
We've been doing this for a while, Ryan. We
have, my friend. If it depends on what kind of trust it is, what type of special needs trust, as well as, like Keith said, if it was designed properly. So, for example, if you have a first party special needs trust or self-settled, which is your child's money, right? And so what does that mean? That means, let's say there was a lawsuit. There was some type of liability event that your child received a settlement on. Well, that's their money. Now, you probably still need to put it in a special needs trust if it's more than $2,000, or else they're not going to qualify for benefits. But that's a self-settled first-party trust. It's your child's money. So in that kind of a trust, yes, there's a payback provision to Medicaid. That's why you never want to add your money. If your child has one of those, you never want to add your money to that trust. You need a separate one that's called a third-party supplemental needs trust or special needs trust. And in that one, if designed properly, as Keith mentioned, there is no payback provision.
Okay, great. I hope that answers your question. And let me move to a few others, if you don't mind. This is Catherine. And I'm interested, if you guys don't mind, in the chat, tell me where you guys are all calling in from or logging in from. I met a lady through email who's found us, and she's in Bermuda. So I just think it's so cool that this technology allows us to reach so many people. So Catherine asked the question is, can the individual with a disability have a 529 college account and an ABLE account?
At this point, the regulation's not specific. So the answer would be yes at this time. Again, the 529 college account, different from the 529 ABLE account. That the 529 college is also not a countable resource or asset against your child in qualifying for government benefits. And the reason is because they're not the owner of the 529 college plan. They are the beneficiary of it, so they don't own the account.
Okay. All right, let's take another one. Monica.
And here's one more on the 529, because I've had this question before and I didn't know the answer to it before.
Okay.
But it's in the regulation, the proposed
regulations.
Are you there?
Yeah, I'm here. There you go.
Sorry.
I thought I was gonna have to do it myself, and I was in trouble.
Yeah. Technology, baby. I don't know where I was. I was just rambling off, boring everybody to tears.
Nobody could hear you, Ryan. So
yeah.
You were answering
529 college to 529 able.
Yes, and you said
can you do that?
You said you didn't know the answer to something. That's where we were.
Okay. Sorry. So I had questions before of if I opened a 529 college account for my child, not knowing if they were going to go to college or not, but hoping that they might, and now realize that they do not go to college, then can I just transfer it to the 529 able account if I open up one of those? And the proposed regulation is pretty clear. It says, no, you can't. You can't do that tax-free. You can't move that over. So what you'd have to do is close the 529 college account, pay the income tax on the growth and the 10% penalty on the growth at the parent's tax rate, and then contribute that to the 529 able. So we're not able to do it the way that we like, meaning just transfer it over. So the proposed regulation is pretty clear that if you have a 529 college account, it's probably not going to be effective or efficient to transfer it to a 529 able account. So
I see a question from Monica. I think that you just answered that. She says, can we transfer money from an able account to a special needs trust should the able account balance get too high? And the quick answer to that is
no, because that's not a qualifying disability expense out of the able account.
Okay, that makes sense.
What you'd rather do is, yeah, well, we don't know that answer yet either, so I'm going to hold that for a moment.
Okay.
Until we get the finalized version. But the answer to that one is no, because a transfer is not going to be a qualifying disability expense. Again, the way that they define that qualifying disability expense, it's related to the maintenance or improvement of health or independence.
Mm-hmm.
And so they have a whole list in that, and we can certainly put that up later, but certainly costs for education, housing, transportation, employment, training and support, assistive technology, personal support services, health, prevention and wellness, financial management, administration services, legal fees, expenses for oversight and monitoring, funeral, burial expenses, and it says expenses under approved regulations.
All right, let's take a couple more questions and then we'll let you get back to your presentation. So if you guys have any questions, be sure to go ahead and ask them, and we're going to do our best to get to everybody's questions. So Kathy asks, so we have to leave an account balance at $99,909 or less to prevent losing SSI's benefits. And if that's true, then you also have to have no return on that, because if it goes over $100,000. Clearly, you don't want to even get close to that, Kathy. Is that the answer, Ryan?
Yes.
Right. Ashlyn asks, is the 10% extra tax penalty part of the proposed regulation or law?
It's part of the proposed regulation right now.
Okay. Let's see. Drew asks, how does that Medicaid pullback impact special needs trust? Do you understand that question?
Yep. So the Medicaid payback. Again, it depends on what type of trust you have. If you have the properly designed trust for your money, grandparents' money, aunts and uncles, everybody else's money besides your child's, then there should not be a Medicaid payback provision from money inside of a properly designed special needs trust.
Excellent. Okay. All right. I think those are the questions right now. And if there's any more, please enter them. And we have people coming from all over the country. It's really nice to see. So we're impacting people and helping people. So go ahead, Ryan.
Right. Yeah. I mean, I think we hit a lot of the pieces that I wanted to go over. I mean, just to give you some information there. I mean, in terms of the actual investments in the account, right now, you can adjust those investments 2 times per year. So what I mean by that is if you wanted to reallocate your investments, so maybe, and we don't even know this yet, really, sorry, in terms of what they're going to allow you to invest in. We've always been under the assumption it's going to be similar to 529 plans, so 529 college plans, so probably some mutual funds or things like that. So when they say you can basically reallocate your investment portfolio inside the 529. Right now, according to the proposed regulations, they'll allow you to do that 2 times a year, and no more than that. One of the other things that's interesting is the federal regulations allow each state ABLE program to actually contract with what they're calling a community development financial institution, CDFI. What the heck does that mean?
Right.
I mean, I was like, what? Community development financial institution. So what that means is the state ABLE program can contract with an organization either throughout their entire state or in different localities to help the state basically provide screening and verification of disability, certification of qualified distributions. It could be those organizations aren't necessarily going to be the investment firms like, a mutual fund company, but they would in terms of the description of that entity, it would be more like an already existing service provider to the disability community. So it could be an entity, at least this is how I read it. So take that for what it's worth, which might not be very much. But an organization maybe that manages supportive housing and supportive living or supportive employment, that manages adult services. So that already is part of the disability community, already understands, what the definition of disability is for the qualification for SSI. Does that work and can help the state make sure that these accounts are opened in the right way and help to manage on the expense side. Don't really know exactly what those will look like, or even if each state would even have one. But I thought that was an interesting piece in terms of kind of the back office running of these ABLE programs.
Excellent. Sorry, I'm multitasking here, trying to get to the questions. Ashlyn asked a follow-up question, Ryan.
Yes.
And I told her I'd get to it. So, and Kathy, I see that someone posted the proposed regulations online. So thank you, Ashlyn, for that. Appreciate that. So Ashlyn wanted to ask, can you explain more about how a withdrawal from an ABLE used for housing expenses will impact SSI payments? What types of housing expenses specifically? Are you able to address that now?
You know what? It doesn't say anything specifically, at least not that I saw in there. It just says that it could be used for housing expenses. And again, as long as it's a qualifying disability expense, and if it's under housing, because all they state is housing, they don't state anything specifically more than that in these proposed regulations. So if there's nothing more than that, then you could probably argue any housing expense you can use this ABLE Act money for, and it wouldn't impact SSI at all.
So that would be like property taxes, it'd be like mortgage payments, it would be like water, sewer, garbage, it would be like maintenance, repairs, that kind of stuff. Right,
which is if that's the case, which again, if it says housing expenses with nothing else labeled in there, then you can make an argument for any housing expense, I think. Then that's one of the places where it differs greatly from a special needs trust. And where the two really might be able to work together in a very symbiotic relationship.
Mm-hmm. I wanted to ask everybody who's watching this, if you guys had any questions related to this or any other topics, because we want to make sure that we guys are giving you all the information that you guys want to hear about. I knew ABLE Act was something that's important to people, but if there's other topics that relate to special needs planning that you want to make sure that Ryan and I address in the future webinars, please put it in the comments, send me an email, let Ryan know, because I'm a dad. I have a kid who has autism, and I'm not a financial planner. I'm not an attorney. I'm not any of those things. I'm just a dad trying to figure this out for myself. So anything you guys can give us to help these be better for you is what we're looking for. Ryan, did you have anything else you wanted to cover in today's webinar?
I don't have anything right now. I mean, if other people have questions, we'll certainly be happy to do our best to answer them. I mean, right now, we give our public comments, and then we'll wait until after October 14th to see exactly what the rules are. and then we'll be back if you guys want us to.
Well, yeah, exactly. If they want to, if they want us to, then we'll be there. But I think that we're giving good, useful information to people. Let's see. Any last questions before we sign off, guys? Kathy, all right. So Jody just says, my son just invested. Right, my son just invested the house, and it cost $13,000 to repair. Can I use the $13,000 Medicare cent that he has to get rid of? I'm not really sure I understand that question. Do you, Brian? I think that
Not sure.
Her son just invested in a house and it cost $13,000 to repair it. Can she use the $13,000 Medicare cent that he has to get rid of? That's the part I don't. Hey, Jody, if you're still there, can you maybe restate that, and hopefully we can get to that? And anybody else, we're going to, in last calls to get your questions answered. We want to make sure we're doing that. Let me look at. Okay, Ashlyn has another question, and it's not belaboring the point, Ashlyn. We're trying to get you what you want. So her comment is, sorry to belabor the point, but this is from the federal law. As far as I know, housing expenses are intended to receive the same treatment as all housing costs paid by outside sources. SSI benefits to reduction of 1/3 federal SSI payment as applicable.
And is that, again, if you send that to us, we'll look at, again, the 1/3 rule I did not see as part of the ABLE account, but the 1/3 rule is certainly part of the SSI regulations, meaning that, what they do is if you do give money for, certain housing expenses, for your child, or they live with you, they will deem that as income or as in-kind support and maintenance, and reduce that SSI payment, by 1/3. And I don't know if that's what that was, or if she is, seeing that from the regulations or not.
Hey, Ashlyn, I'm going to ask that you reach out to Ryan directly on that, because I want to make sure you're getting the right information. And it may not be applicable to everybody. So if you don't mind, that would be great. And Ryan, why don't you give her your contact information as well? Yeah,
absolutely. It's you can reach out to me by email, and then let's grab a time to talk about it. R Platt, P as in Peter, LATT, at aspecialneedsplan.com.
Okay. All right. We got a couple other questions that came in, and it sounds like the consensus of the few people who responded is that they want us to do and we have done a presentation on a special needs trust before, how to fund it, but we can do another one and let you guys know when it's coming. We'll send out an email blast to everybody so you can register for that webinar once we get it set up. But let's see here. Kathy asks, I don't have a current 529 account. So to open this ABLE account, and we have to contact the state entity, we would not be contacting a bank after setting up a special needs trust. We went to bank to open an account. I'm not sure that's a question.
Well, again, we don't know yet where you're going to actually open up a 529 ABLE account yet. I think I said that twice. That didn't make any sense either. But right now, there's nowhere you can open up an ABLE account. You can't open one yet. They're not even available. So these proposed regulations have to get approved. Mm-hmm. And then each state has to determine how they're going to open them. They will be with a financial institution of some sort and in some manner, but we just don't know what that looks like yet.
All right. Bob Derber has asked, I'm sorry for saying your last name, Bob. Has the Social Security Administration proposed regulations for the Medicaid and SSI side of ABLE Act implementation, as far as you know?
What
has the Social Security Administration proposed regulations for the Medicaid and SSI side of ABLE Act implementation?
I think they work hand in hand with these regulations. Again, Where they're impacted by SSI is when the account value gets over $100,000 and SSI is then gone. The other piece where it impacts it is if distributions are too high, or the distributions come out and they're not qualified, then that will go as income to the beneficiary of the 529 ABLE, which would impact their SSI amount that they'd be receiving. The other idea is if there's a contribution above the $14,000, somebody makes a mistake and puts more than $14,000 in there and doesn't get that out by the beneficiary's tax return year of that happening, then that amount will be used as income against the beneficiary, as well as a 6% excise tax on that amount if you contribute more than the $14,000 in a year. And obviously that counting as income would impact the SSI and possibly, well, it would impact the SSI and then possibly Medicaid, depending on the amount that was contributed over the $14,000 number.
Okay. Let's see here. No, I think that's right here. Where is it? Somebody deleted their message. I had it and then it was gone. I think that's pretty much all of the questions. Does anyone have any last questions before we wrap up today's show? Just to give you a heads up, we have another show scheduled, and this is something we're going to try totally different. Just a question and answer period. Just a general discussion about special needs planning, and then the question and answer. You guys can come bring your questions, what's important to you, and we'll see how it works. We've never done that before. And if you're interested in it, that'd be great. You're on our email list, so we'll send it out to you and you could register for that webinar as well. It's going to be August 21st at 11 a.m. And I'll send everybody here a link to register for that webinar and see how it goes. I think it might be very helpful for people. Let's see here. Anything else, Ryan? 11
a.m. Pacific time, right?
Oh, yeah. Sorry. Isn't everything based around California? Come on now. That's what us Californians think, at least. So.
Yes, yes, yes.
All right, everybody. And, you know, I never did say, Our Special Needs Children is a website that I created just to help provide information and resources to other parents. And that's the whole purpose of it. Our Special Voice is an advocacy organization that we're creating so that we can have a greater impact and a greater voice on the future of our kids with special needs. I think very similar to the elderly community, I think the special needs community could have a great and very impactful voice. So that's what Our Special Voice is all about. So you'll find out more about those as we continue to move that stuff out. But this is educational, trying to educate myself, educate other parents, and hopefully you guys have found it useful. Ryan, thank you as usual for your time.
My pleasure.
Any last words of wisdom you'd like to impart upon us?
It's Friday, everybody. Have an awesome weekend.
All right, you guys. Thank you, everybody. Have a great day. Talk to you guys soon.